This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. Welcome back to the channel. So today I am going to go back. I know on Fridays I talk about the S&P, and I want to make sure people are clear that I use that as a proxy for you to understand how I would go about analyzing a particular instrument. Yes, there is kind of a market call obviously involved, going through the market conditions and giving you a really good sense of how I feel about the market, but I do want you to understand the process. So what I want to do today is actually differentiate the S&P and the Dow Jones. I'm going to go through the DIA and the SPY and show you the differences. And the way I want you to think about this is if you're trying to compare two different stocks, especially right now, the research that I send out in today's research, I basically show how there's a significant number of stocks that are rallying into resistance and look like I have a problem, while there's a whole other list of stocks that have shown real strength and we probably want to be looking to buy minor weakness. So I want to show you kind of the difference here looking at a Dow and an S&P so that when you're going through your stocks, it makes a little bit more sense to you. Let's go ahead and get going in this. So I'm starting with the DIA. In fact, what I'll do is I'll start with the S&P because we already have a reference point. This is from my Friday review. And you can see how we rallied up to this trend line, very, very popular trend line that everybody in the world is talking about, all right? I typically don't think it's that easy, so I'm not questioning whether the market can go down. I'm questioning whether it goes down straight from this. When anything is so popular, typically you get some kind of at least a break. Make it a little harder on the average trader, even if you are going down. So I keep that in mind. Now in the short term, we have broken the short-term trend. I think if we come back down through these lows here, I personally actually think we're going to come down because we want to see a little bit better test of the zero line. But what I want to show is if you got this trend line here, you've got the ADX pattern and the MACD on the weekly, and I want to focus mostly on the weekly and the daily. But let's go ahead and pull up the DIA now. Now look at what the difference is. If I'm drawing in a trend line on the Dow Jones, I would have had one here that was violated. And then I would have redrawn it because it went to a significantly new low. It wasn't really a quick undercut. So I would actually, the way I would be doing this and the way I teach this in my course is I would redraw the trend line here. Now, we've broken the trend line. Remember, the S&P has not broken its trend line. It hasn't done it once. This has broken it twice. So I would be looking for a pullback into support here that I think could be pretty interesting. Now, the reason why I like this move to the upside, because I see a lot of guys out there that are saying, oh, this is a big rally and a topping pattern. But you have to measure the momentum on the way up, okay? So this made a higher high. And we've also gotten the MACD to cross above the zero line. And the reason why I think this is important relative to this is that on the Dow Jones chart, we actually have made a new high in price, okay? So we're making a higher high here, and we have confluence, not divergence, but like confirmation, convergence, where this is being confirmed by the MACD. If we go back and look at the S&P chart, we're making a significantly lower high while the MACD makes a higher high. That's a difference, right? This is lower and this is making a higher high. So in the fact that we're making a higher high on this and a lower high on this, that is divergence. Now, sometimes it's standard divergence where the price is making a higher high and MACD is making a lower high. But you could also call this reverse divergence where MACD is making a higher high and the price is making a lower high. Now, if I go back to the Dow, what this tells me is we have convergence to the upside in this index. Now, it doesn't mean it can't pull back. In fact, if you look at what happened at the peak here, we were making moves to the upside, and then notice how the MACD did not confirm at this peak. Let's look at this. So I'm going to show you right where the price was peaking out. You see how this undercut the signal line and then did like an underpinch. It pinched underneath while this was making a new high. So we have a sign of a divergence developing, a standard divergence at the prior peak. So on a short-term standpoint, I do think that's a negative, and this probably does want to work its way back a little bit more. But when I look at it from an intermediate term standpoint, this is the type of pattern that I'm a lot more interested in. I want to go find stocks that are driving off their lows with a pretty powerful move, showing signs of improvement here. We do have green DI really kind of kicking back and trying to hold the 25 line. But where I'm seeing the real momentum is off the daily ADX. This move to the upside showed real strength, right? We got the green DI to cause the blue line, the ADX line, to get well above 25. And that is a really good sign. If we go back and look at the spider in the same instance, this rally was not, we were not able to get through 25, even though we made a pretty significant move off the low. So as I go back and look, I'm thinking, okay, do I think the market's going up or do I think it's going down? Well, whether I believe one or the other, I want to be looking at these type of patterns on the long side on a pullback. So if we're going to pull back, which I do think is a pretty high probability, at least in some way, shape, or form, and if it's orderly, if it's an orderly pullback, I am looking for the stocks that did this because I think we're going to get a lot of buying opportunities. So that's how I would go about doing this. Now, look at the monthly chart. You see how this push caused this to get through the 18-month line? That is a little bit more significant to me than what we're seeing. I'm going to go back and show you on the spider. See, this is a rally up through that 18-month line. Now, isn't really cleared it. It hasn't gotten disconnected from it, but it is preventing that line from truly rolling over. If we go back and look at the spider chart, you see how this is clearly failing at a declining line. Well, it hasn't even gotten to it yet, but this line is really rolling over. And we're not showing the same kind of strength back to the upside. So again, I'm looking for those stocks that are exceeding this line on the way up, showing momentum characteristics on the daily chart that shows new momentum showing up, like we're seeing in the DIA, right? Good momentum here. And then I'm also on a weekly chart, I really like the stocks that drive off the low. Now, why do I want that? Because you create a measured move. The measured move is when you're making lower highs and lower lows and then you drive off of a bottom, you get a move, a direct move. So you can see this is an uninterrupted move. We didn't have one bar on the weekly chart take out a previous bar's low. This is a drive to the upside. Now, what you're going to do with this is you're able to create, it's called a measured move because we can measure the potential upside as this pulls back and comes into support, let's say. We can take this low to here and add that to the next leg to the upside. Depending on where this bottoms and how it turns up, we have somewhat of a measured move of what to expect on the way back up. Now, you can use a fib grid on the way back up and say, look at this, the 382, the 382 back coming back up, the 618 or the 200 to get an idea of how much upside you really have. But just knowing this one leg was really strong off the bottom, those are the stocks, again, I want to be focusing my efforts on. So we want to look for stocks that have kind of exceeded the 18-month line or at least gotten it to a point where it's flattening out and it could provide support on any kind of a pause or a pullback. We want a really strong move on the weekly. We want, some signs of dynamics, and at a minimum, we want either the green DI showing strength, which this is okay, but not that powerful. But what I like is what is going on. You see the separation between the MACD and its signal line and the fact that the MACD has gotten through the zero line as well, and it's confirming the high. So this is making a higher high, as is MACD. So that's another point. And then the third thing I want to look for on the way up is signs of true momentum based on the ADX. Because ADX is a lagging indicator and we had a big drop to the downside, if you're looking for the weekly to confirm this initial move off the low, you're not gonna find a whole lot of stocks doing that, right? We want to use the smaller time frame to tell us if we've got new momentum coming in, and that's what's showing up here on the daily ADX. All right. So this is how I would differentiate between the Dow and the S&P. Obviously, I like the looks of the Dow a little bit better. It's got different exposure. It's a price weighted index. It's not a market weighted index. So stocks, the big cap stocks, are not weighing this index down as much as the other indexes. All right. So hopefully this helps. Go ahead and post any questions or comments. Thanks.